Today we're going to talk about banks, the stock market, and an update on Bitcoin. So, starting off, we have banks tap Fed liquidity tool amid year end pressures. What does this mean for people that don't know? Is banks are currently not doing so good. They're not lending to each other and they're stocking up on gold. If you guys want to see more about that, there's more in my other videos in the past. But they have finally triggered the liquidity tool that the Fed has, because the Fed is just a reserve and then the banks tap into it so they get more liquidity so they can keep handing out debt, because money is just debt. Following, you have big word tenuous, hopefully I said that right, peace between Trump and the 30 trillion US bond market. Now, what does this mean, Gordo? Well, to tell you the truth, this just means that the bond market is somewhat steady. When you have the short term yields higher than the long term yields, that's not really healthy. Usually, you want your money sitting in a T bill for longer to get a higher percentage. What was being done was to spike the short term ones to try to balance out the bond market. And right now the bond market's a little steady, but I will show you something in the chart. So here's your 10-year yield. You have your head and shoulders pattern, your neckline, and if you look very closely, today we broke that neckline down. So no more head and shoulders pattern, but there is a new pattern. So here's your new pattern. It's called a flag or a descending broadening wedge. Same thing as all the other patterns, it just depends where it breaks. Right now, you're heading down towards the bottom area of the lower descending wedge. You either bounce off of that or you break through that. Ideally, these break up, because remember, the market's just a rubber band. Stretches and snaps back and resets. That's all it does. It just does that in a direction because it doesn't go straight in one direction. Still a possibility of us going up. Also, the 200-day moving average, when it goes flat, that means a reversal may happen. Not 100%, but it just may happen. And your stocks ease from record highs. World index is set for double-digit 2025 gains. Before we jump into that one, let me show you something else. You have your S&P 500 and you have your 10-year yield. Usually these work hand in hand. They follow each other. That's a healthy market. When you get this, what's on the screen, it's a bubble. And bubbles usually get popped. So here, you see the S&P 500 on the left side of the screen, and then the 10-year yield right below it. They follow each other. When the 10-year yield goes above the S&P 500, that's when things snap back and they start going bullish. Here, we have the S&P 500 way up in the sky and the 10-year yield looking up from the ground. This is your bubble. Now this bubble will pop. When will it pop? I don't know. I just look at the chart. And if it breaks a certain line, then I'm like, you're most likely to go that way. So let's go ahead and jump into the bigger market charts. Starting off, you have your S&P 500, the symbol SPY if you want to trade it. You have a rising triangle and you're bouncing inside of it. And you won't believe it, but you got rejected off of that. So no more big, strong S&P 500 for next year so far. You still can break up out of it. It hasn't broken out of the pattern, so we still don't know where it's going to go. It's just most likely to go down, especially if you pull up this oscillator. You have the top here of the S&P 500 running up. Here, you have this oscillator going down. You have that alligator mouth. My wrist doesn't stretch that far, but you have an alligator mouth. Usually, the stock will follow the direction of the oscillator. So, high probability S&P 500 goes down, breaks down out of this pattern, just because you have that extra added indication of a divergence. If you guys like the cues, here's your cues. You have similar pattern, It's a symmetrical triangle. It's just going flat across the screen. You have your rejection point right here. You can check your oscillator. Your oscillator's down. And it's aligned on this one, so you're fine. This one just depends where it breaks out of. Here's your Dow Jones Industrial Average, the symbol DIA. You guys have this trend line here. You guys have this other trend line here that goes back forever ago, and you got rejected off of it. If you break this bottom trend line, bye bye Dow Jones Industrial Average. You haven't broken it yet, so nothing really eventful has happened with the Dow Jones Industrial Average. All three of them, they just got rejected off of a trend line drawn. They haven't done any meaningful move saying that it's going to go in one direction. Finally, silver and other precious metals hit new peaks before falling back. Oil prices rise after Trump, that guy meeting, as it happened. So, you could have seen this one coming. Now, Gordo, what do you mean you could have seen this coming? It came out of nowhere. Well, right here. I said pattern. Broke out of said pattern. You measure. You go here. You go there. Put it on the breakout. Cool. You're supposed to go right there at least. You went past that. Cool. Market is a rubber band. So it stretched, it stretched, it stretched, it stretched, and now it hit a peak, and then now it just snaps back. That's why I'm not really surprised about the decline that happened today. Same with your gold. Trade played perfectly out, went above where I said it would go, and then it just snapped right back. Would you look at that? It's almost like I called the top. And could come back up, could come back down. I don't see anything saying what may or may not happen. It did gap down. Usually it doesn't like doing that. So it may come back up to fill that eventually. Who knows when. But let's keep going. Here is your oil. Your oil is down right now. Usually signals that you're in the middle of a recession. But there you go. There's your chart. You have pattern, broke down out of said pattern. I said ideally you want to come up and retest. You came up and retested, got rejected. Can still go down lower, although now you are in a new pattern, which is this pattern. It's just went from horizontal pattern to descending pattern. Now descending, which means most likely to go that direction. You will also have the oscillator right here. This you can see in the oil chart. You have a low here and then a lower low. So two lows going down, oil go down. Oscillator, low right here, higher low there. Oscillator go up. You have arrow, which means most likely it goes up because in the oscillator is pushing you upwards. So the oil is eventually going to snap up. And finally, as promised, your Bitcoin. I don't know what happened to all my drawings, but they all disappeared. Here is your new pattern. There is your horizontal pattern. You are still below that giant moving average, which means you still want to go lower. Only reason why Bitcoin hasn't gone lower is because we are in the holidays, liquidity's down, and not much trading is going on because people have families. Yes. Here, your price target would be measured from here to here. You break down out of pattern. You go down to there, 76,000. So into the 70,000s. You break up, out, you go into almost 100,000. Again, it just depends where it breaks. And finally, again, if you guys enjoy this content, please subscribe, like the video. If you think somebody would enjoy this content, share the video to them. And I will see you guys Wednesday.